Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Thank you. Happy Monday.
Happy Monday to you. Happy Monday to Carvana shareholders. Andy, this stock has just been a rocket ship this year. Some big gaps to the upside, up about 104% on the year. You know what, Andy? I just keep thinking back to about a year and a half, 2 years ago, when then everybody was saying this stock was good. They were going to go out of business. The company was going to go bankrupt. They had so much debt on their balance sheet. Nobody was buying cars. Their margins were shrinking. Do you guys have the data to back up this move? Because it's pretty spectacular.
Yeah, we have the data. Carvana has the data. You know, this is just one of those epic turnaround stories. You mentioned the stock has doubled this year. If you look back to June of 2023, so really 12 months ago, it's up 450% since then. That's an incredible move, and it's all basically on the back of a very successful campaign to improve efficiency of their operations. And, companies talk about, embracing efficiency and they're going to cut costs, they're going to improve margins. I really haven't seen a company do it as well as Carvana has in such a short period of time. They've reduced the selling and administrative costs per car by 17%, got themselves quite profitable, good cash flow situation. And from a data perspective, they're maintaining a very high level of growth and consumer happiness. When you look at Likefolio consumer happiness levels for Carvana, it is beating all of its competitors, fairly significantly, at least holding its lead as they implement these efficiency operations. There doesn't seem to be any negative impact on the consumer. And we're also seeing that show through in the year-over-year web visits. And I think web visits historically, Likefolio's web visit tracking has been a very good indicator for revenue growth for this company. It's something we saw pick up right before the big stock move to the upside, plus 29%, while other competitors are plus 7 or plus 9% is just an incredible feat. Especially when you consider the environment that the consumer is facing right now. Auto loans are anywhere from 8 to 11, 12%, significantly higher. I think the average car buyer is going to pay $4,000 or $5,000 more over the term of a loan just in interest. So there's some definite macro headwinds that Carvana is carving its way through and doing a very, very good job of making it through without impacting the consumer in a negative way in terms of that experience, but also producing more and more cash flow for its investors on Wall Street.
Yeah, Andy, they have a really good statistic that they put out. In 2022, their gross profit per unit was about $3,330, 2022. 2023, $5,500 per unit sold. So
right.
That means they're spitting out cash. And, now that's the good thing. And we've talked about it on this show before, how they need a stable market where they can buy cars and sell cars and just keep that going. There is demand, but this is not a cruise line, Andy. This demand won't go on forever, as you know. They've got the only reason they made money last quarter is because the debt that they retired, they got a little payout from, or they'd have lost $700 million without that payout. So they've still got a lot to prove and a heavy debt burden. The question for you is, your data is strong. It's clearly the leader, but is this part of the auto sector, can it withstand any other weakness?
Yeah, I'm worried about that. Likefolio data is strong. Consumer happiness levels are high. The year-over-year change in web visits, 29% is good. But when you put it in context, that number was 51% a quarter ago. So the growth rate is slowing. It's still very impressive, but it's slowing down. And I think that there's just an enormous amount of macro pressures on the consumer that are starting to take their toll. So short term, I think Carvana has some serious headwinds that is going to have to fly into that could be very difficult. But long term, this is a company that has executed to such a degree that you have to believe, it is so far best of breed in the used car market that, when things do turn favorable, this is a company you got to feel like is just going to absolutely print cash. Now, whether that's in 2024, 2025, or 2026, no one really knows. But I like best of breed companies. This is one I would put on my watch list and just say, look, we could be in for some turbulent short term, but this is one on any big dips, any big, macro related dips that I might want to add to my portfolio for the very long term.
Yeah, Andy, you mentioned the happiness. I've always had a problem with that. It's like a car. I don't know if I'd ever want to buy one where they just drop it off in my house without checking it out, test drive, all that other stuff. I think that was always a concern for me. But when you look at the pricing on new cars, so 17% of new cars that were just bought in the last quarter now financed, 17% are now financed at $1,000 in a monthly payment. I mean, that's bananas to me, that 17% of people are, paying over $1,000 a month for a car. Is that part of the reason that, Carvana's getting so successful is you're pricing a lot of people out with the inflationary pressures and the price of automobiles?
Yeah, COVID, it completely changed everything. I remember we went to buy my daughter a vehicle, and it was actually cheaper at one point to buy the new one than the used one. Everything got flipped upside down. Everything got changed. The way that auto manufacturers sell their vehicles new completely changed. The days of haggling for 20% off of a new car are over. They're going to sell, it seems like they're happier with less units and greater profit margins. And that does bode well for the used car market because it is so tough to get a good deal on a new car. And so I do think that rotation from new to used cars is definitely underway. But at the same time, with interest rates 11 or 12% on used car purchases, that gets that payment up really quickly. For the same car, you're paying a lot more money. And the consumer is just starting to really get tapped out. And so, Carvana has a lot of work to do. They've done some excellent work over the last year. They've set some very lofty goals for the next year that I'm really impressed with. If they can hit those targets, then this company continues to advance its lead as best of breed in the industry. But it's a tough industry.
Yeah, they got to keep on reducing that debt also. Real quick here, Andy, if you had an earnings score for this one, would it still be positive, or would you guys wait for pullbacks?
Yeah, we would wait for pullbacks. I'm really hoping. I think the company reports late next month. I think if we can get a nice pullback going into that would get us to a positive score because pretty much all signals are positive, but stock price is pretty tough to justify right at this moment.
All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you. Have a good one.
All right, that's Andy Swan, co-founder at Likefolio. Kev, I was looking at the longer-term chart. This stock was $376 in 2021.
It was also $3